GM. My name is Payam Darian. I'm a accountant, business owner, MBA, crypto investor, NFT loss realizer. And today I just wanted to jump on, give a quick overview of the Tax Cuts and Jobs Act, the reason why it's such a game changer, or was such a game changer, and why its renewal is paramount, and the implications of a expiration at the end of 2025, which is currently what we're set to see. So firstly, I just wanted to briefly discuss, let me see, why the Tax Cuts and Jobs Act was so important. This was probably the largest overhaul of the U.S. tax code in the last 30 years. And assuming there's no additional tax laws to extend it, it is going to expire on December 31st, 2025. Now, Trump said he wishes to extend it, but it would be remiss if we assumed that he can pull it off without a hitch. All right, so why was this even done? Like, what were the goals of the Tax Cuts and Jobs Act? Firstly, they wanted to incubate economic growth. They wanted to stimulate business investment, create jobs, increase wages, and spark GDP growth. Additionally, they wanted to simplify taxes for people, by doing things like doubling the standard deduction. They definitely reduced complexity for taxpayers and helped the filing process for a large majority of Americans. They made the U.S., the TCJA also made the U.S. more viable as a competitor internationally. It prevented corporate inversions, and, it encouraged repatriation of overseas profits. And lastly, it provided relief to the middle class through tax burdens and increased take-home pay. The most notable provisions of the Tax Cuts and Jobs Act, let's see. Corporate tax rate was reduced from 35% to 21%, and that's C corporations. Those are the publicly traded corporations. Individual tax rates were reduced. Now, the lowest tax rate was 10% pre-TCJA, so in 2016, it's 10%, 15%, 25%, 28%, respectively. With the Tax Cuts and Jobs Act, it was 10%, 12%, 22%, 24%, respectively. So after the 10% base income tax bracket, there's a 3 to 4% reduction in percentage in your tax bracket, which is that's huge. That's huge. That's a big cushion for the taxpayer. As I said, the standard deduction was nearly doubled, which simplified the tax filing process, and people who would have to consider the itemized deductions no longer did. But along with this came the elimination of personal and dependent exemptions. So they basically doubled the standard deduction, and then they eliminated exemptions. And exemptions are subject to income phase out. So this really hurt higher income, like people who earned above $500,000 in married filing joint, or $270,000 single filers. They were hurt the most by this because they start to phase out because of their high income. The SALT cap at $10,000. So the state and local tax deduction was capped at $10,000. This was probably the most painful provision. Anybody who pays property taxes and lives in the tri-state area or in the West Coast, you're probably paying close to, you're easily paying more than $20,000 in property taxes. The SALT cap deduction made it so that you can only use up to $10,000 in quantifying your itemized deductions. So you're paying 25,000 a year in your house in Closter, then you can only use 10,000 of it towards the itemized deduction figure. If your itemized deductions don't clear the standard deduction, you're going to standardize your deductions. The child tax credit doubled from 1,000 to 2,000 in the Tax Cuts and Jobs Act, with more favorable income threshold eligibility. Higher earners were basically eligible for this credit. There's just something to note about the child tax credit. So it is a refundable credit, but only a portion of it is refundable. And when I say refundable, it means that you can actually get you can get a portion of it back outside of a tax offset. So currently, of the 2,000 per child, you can get 1,400 of it refunded. The old rules were of the 1,000, only 1,000. All of it could be refunded. So just throwing that little nugget of wisdom there. Okay, the 199A deduction. So the Tax Cuts and Jobs Act enabled pass-through entities, so your S corporations, your partnerships, your Schedule C businesses, like a single member LLC or a sole proprietorship, they were given a new 20% deduction of qualified business income, which was basically allowed to be excluded from the income, like from your income, depending on your industry. If you were a service industry, like an accountant, lawyer, doctor, physical therapist, engineer, you were basically allowed to take a 20% deduction of your income from flowing to your K1, which was huge. This is set to expire on December 31st, 2025, assuming they do not extend it. So, assuming things aren't extended, this 199A deduction, also known as the QBI deduction, the Qualified Business Income Deduction for pass-through entities, will vanish, which is bad for business. Additionally, they will remove the SALT cap deduction, which is great for basically any homeowner. Low, middle, high income earners will benefit from this. So in New Jersey, even if you're renting, you get to deduct the rent paid as property taxes. So I think it's 18%. I gotta check it. Is it 18? Yeah, sorry, it is 18%. So if you paid 20,000 in rent in New Jersey, you can deduct 3,600 of it as property tax paid. I mean, that doesn't really, the SALT cap deduction doesn't help you there, but just a little fact nugget I like to extend. It's good to know for the New Jersey natives. Let's see. So, okay, the standard deduction is going to be cut nearly in half and go back to $6,350. But the personal exemptions will be brought back, valued at $5,300 in 2026. So it's almost like a wash. Everyone's going to lose a little bit, but the people who will be hurt most by this are the higher income earners, as the personal exemptions are phased out for like when they earn more. The child tax credit reverting from 2K to 1K is bad for anyone, bad for families basically. For lower income families primarily, actually, because there are income thresholds for this. All right, and those are the Tax Cuts and Jobs Act impacts. The non-Tax Cuts and Jobs Act proposals. Firstly, no tax on tips. I think he has a good chance of pulling this off. Tips in this country are mostly underreported or not reported at all. So I see this as a high likelihood success for valet and servers. Question then becomes, what constitutes a tip? If someone gives you a bonus at work, is that a tip? My answer would be no. If it's a deduction to the employer, then it is likely not a tip. In addition to no tax on tips, there's no tax on Social Security. Currently, you're paying between 50 and 85. You're paying tax on between 50 and 85% of your Social Security benefits, depending on how much your benefits are. So he is proposing that we just exclude Social Security from taxability. I think this is a higher success rate, as this was the standard back in 1983. I don't know who the president was there, but I know that the Clinton administration in 1993 was the one who brought us to our current standard of taxability up to 85%. So I think he will be able to pull this off. I think Congress will go for it. And no tax on overtime pay. I find this to be a harder sell. I'm for it, in terms of virtue, but in terms of realistic probabilities, I don't see this happening because, unlike tips, overtime pay is reported. So for something like this to not be taxed is going to be a lot difficult, more difficult hurdle. And lastly, no tax on expats. This is kind of big. So currently, we have a system where U.S. citizens who live abroad must report their worldwide income regardless of whether they pay local taxes where they live. So if you're living in Spain and you earn income there, and you pay tax on that income there, you still have to report it in the U.S. and you get a tax credit for your foreign taxes paid, but you may still have to pay the difference. So he is voting to eliminate this double taxation, which would help our expats and who are currently going under the onerous FBAR and FinCEN compliance of reporting their non-U.S. banks. This will be a net positive, and less U.S. citizens will renounce their citizenship, which is something that people have actually been doing because of this. But yeah, all in all, that's quick lowdown of what is proposed. Hope you learned something new. Tune in next time. Thanks.